Good morning, everyone, and welcome to Daily Trader with Kevin Hincks. I'm Kevin Hincks. We have a show for you where we're going to have a different vibe going into today's show, and I'll explain why. Let's get to our first trade of the day. We're going to look at Apple and we're going to look at Microsoft, but we're going to do it in a way that is a little different than what we normally do in the past, and that is, looking at these from a look how far they've run and what can you do to defend that in terms of their movement. So let's go to Apple. As you know, Apple currently sits at a PE ratio of about 40, right? Which is historically high for this name. And even though their services, all the things that they do in the services part of their company are expanding, the overall sales are decelerating. And that's been happening for a while, yet Apple stock has rallied. As you know, if you look at a chart on Apple right now, this stock in the last 12 months is up 26%, but it's up 23% in the last 6 months, right? That second half of the year, anticipation of the iPhone 16 and the super cycle and all the things and the Apple Intelligence and all the things that it could lead to are in the stock right now. So how do we look at it? Well, we're going to look at it in a more protective way. And so what the practice money, paper money trade that I looked at here is something going out to the December 27th and buying the 235 put and then turning that into a put calendar, which is selling the December 13th, not this week, but next week, 235 put. Remember, the difference between the calendar spread and the diagonal is the same strike on the calendar spread. So a put calendar in Apple, buying the 235, selling the 235 on the December 27th and the December 13th strikes, buying the further out, selling the closer. Now that's trading, we put it in there for about 70 cents. It's currently trading about 70 cents. So that's where it's trading. What does this give you exactly? If you look at the overall delta, it's about 8 deltas short per calendar spread. If you were to put 10 of them on, do the math, it's about 80 deltas. You're collecting about $1.50 day, $1.50, $1.60 a day in theoretical theta decay. And what might be the nicest part of it, because remember, you're looking at a VIX around 13.5, you've got about 9 Vega on this trade. So what do I mean by that? If a put calendar, if you get the directional move that you're looking for toward the 235 strike, you get the directional move and you may get a move up in implied volatility, which will help having long Vega. Remember, we talk about trading volatility from buying low and selling high. Well, the overall implied volatility of Apple is relatively low right now to its historic levels. So buying this buys implied volatility. If you were to get a down move, you might get an uptick in volatility, and that would help this trade, not hurt it. Okay, so a put calendar in Apple. And remember, there's Christmas shopping. Everyone, are you going to buy a Mac? Are you going to buy an iPad? Are you going to buy a MacBook? Are you going to buy an iPhone? Are you going to buy an Apple Watch? Are you going to buy earbuds? All those products that a lot of us own in the Apple ecosystem, but the bar is very high, right? So there's the question for the stock. You may love the product, doesn't mean you should be long the stock at these elevated levels. So this is a protection strategy or a bearish strategy in Apple. All right, now let's get to our second trade of the day, and that is Microsoft. Microsoft is another stock that is currently sitting at about a 36 PE. It's been higher, but only slightly higher in terms of a price earnings ratio. So both these are on the expensive side in terms of valuation, as is, frankly, the S&P 500 in general. What's similar to these two names? Both have a big ecosystem and a product portfolio. Both are in 3 of the 4 indices, NASDAQ, S&P, Dow Jones Industrial Average. So if the market moves, these stocks will move with the overall market. So now let's get into Microsoft. It's got a high PE ratio. It's got a high valuation, but their products are essential. Think about the products that they have. Cloud, Azure Cloud, Windows, 365, LinkedIn, Xbox, and Activision, now part of Xbox, Copilot. The suite of business lines that they have is unprecedented. And long term, this stock has a very bright future. But right now, the stock is valued, it's got a very high valuation. So the bar is high again in Microsoft. But we're going to look at this one a different way. We did the long put calendar in Apple. In Microsoft, we're going to do the short call vertical. Now, Microsoft, as you know, is currently trading about $437. The practice money trade we looked at here, going out to December 13th, only about 8 days, next week's expiration, selling the 445 call. Now, we looked at the expected move out to December 13th, about $10, which would take you to 447 on the upside. That's $10 up or down based on the implied volatility. Our trade, selling the December 13th, 445, 450 call vertical. I think we put it in around $1.10 credit. It's currently trading right around $1 credit. So somewhere around there. This is a trade that, like I said, let's call it $7.50 above the market. Remember, the 445 level is the strike that you're selling. So even though Microsoft has an all-time high made earlier this year of 468. Look at the chart and how many times it's failed. Right around 438, 439, right where they are right now. It's had a tough time getting through this exact level in the past. You can look at that on your chart at home. It's pretty interesting. So, selling the call vertical in Microsoft, selling the 445 call, and then for protection and risk management, buying the 450 call. Now, the risk on this trade is the difference between $5, the width of the strikes, and whatever credit you get for this. Could it be $1? Could it be 90 cents? Could it be $1.10? Whatever you get for this is the max profit on this trade. One of the trade-offs that we talk about when we have long versus short vertical spreads is the max profit you can make is the credit taken in, but the risk is outsized, right? Because you've got $4 and change of risk. Now, here's something interesting. The probability of out of the money in the 445 call is currently 73%. That means by next Friday, December 13th, the probability that the 445 call will finish out of the money is 73%. So you're trading with high probability, you're collecting theta, and your risk defined, it's got about 11.5, somewhere around 11, between 11 and 12 deltas on this trade. And three things can happen where you're profitable. Microsoft can go down, Microsoft can stay right here where it is and you're profitable, and Microsoft can rally up but not violate the 445 strike. Any of those three things happen and you're profitable in this Microsoft up till next week. Again, the risk, the difference between the $5 strikes and whatever credit you take in. That's our trades for today in Apple and Microsoft. That's our show for today. I'm Kevin Hincks, and we'll see you tomorrow with another edition of Daily Trader. Have a great day, everybody.